Hi, I'm Aldo Lagrutta, founder of the Technical Analysis Institute, where we help traders start and sustain profitable careers without the typical frustration and losses involved in the process. In today's video, we're going to cover something somewhat unusual, a different type of charting called point and figure. At the end of the video, I'll give you the reasons why I believe every trader should learn point and figure and why point and figure is superior to any other charting system. If you trade cryptos, stocks, forex, futures, or any financial asset for that matter, you want to make sure you watch this video carefully from the beginning to the very end, because what you are going to learn in this video could represent the before and after in your trading career. Let's start with a quick introduction to this unusual age-old charting technique so you too can enjoy the tremendous benefits that it offers. Here is a chart of crude oil. I chose this instrument because the majority of traders want to trade oil and/or the S&P. Now the question is, can you read this chart? It's a point and figure chart that shows two unequivocal sell signals that would have taken you from 93.50, where it gave the signal, all the way down to 87.10. If you have traded oil, you know that would mean over $6,000 in profit with a single contract. The second signal, also unequivocal and without room to interpretations, appeared at 91.30, allowing you to scale into your already winning position and pyramid your profits without the slightest hesitation. I want you to notice that this chart was made with an intraday data of 15 minutes. If you know how to recognize these signals, you are privileged to have a complete trading system that works. If not, then stay with me today and I'll give you a very quick introduction to the system. So what's point and figure? Point and figure charting is a technical analysis technique in which time is not represented on the x-axis, but merely prices changes are recorded via a series of x's for increasing price movements and o's for decreasing price movements. Trading rules are then defined over particular patterns in the X's and O's. Once you learn about point and figure, you'll realize that no trading system that you have ever tried so far has the simplicity, objectivity, and efficacy that can even compare to what point and figure offers. I know everyone will make claims like that about their trading methodology, but point and figure has been researched by several universities over decades, showing the efficacy of the system in computerized simulations. When a discretional element is added to it, the efficacy improves dramatically. So if you truly want to trade or invest successfully with what I like to call the three major C's of trading, that is confidence, calmness, and certainty, you need to learn point and figure. And I'm sure you're wondering, if point and figure is such a great technique, how come nobody knows about it? Well, there may be many reasons and we can address those reasons in a different video. But for now, let's say that the most obvious reasons is that point and figure is only used by serious technicians and professional traders. So there are not many courses available online. You see, all those marketers who learn a couple of technical analysis tricks and pretend to be great traders to sell you courses for thousands of dollars would have to make the effort to learn something that actually works. But alas, it looks too complicated for their quick scams. But the truth is that point and figure charting is extremely simple. You can teach it to your children and they would understand how to trade profitable in a matter of hours. If I may, I want to share with you my own impression of it. When I first learned about point and figure, I thought that it was such a weird way of charting that I could not understand who would bother with it. It looked archaic and so limited to me compared to the wonderful information that modern charts provide us with. I compare those X's and O's to the wonderful world of candles, Renkos, volume bars, and simple bar charts where we can read the open, the high, the low, the close, and still add a dozen of revealing patterns to them. So, to my embarrassment, I tossed it aside. probably one of the biggest mistakes I made in my career as a trader, because I would have saved so much time, so much money, and so much frustration if I had been humble enough to learn it. It was only years later when I was forced to learn about it because I needed to become proficient in the use of point and figure if I wanted to be certified as a financial technician. It was then when I discovered why savvy analysts refer to point and figure as the secret jewel of technical analysis. And here is the best news. It takes very little effort to understand it because its signals do not require of any interpretation like we would need with traditional price patterns, trends, cycles, etc. Plus, anyone can learn it regardless of their previous market knowledge. As I said, even a child can learn point and figure and apply it with the same efficacy a veteran trader would. So let's get to it. Point and figure charting originated in the 19th century as a very innovative method for graphically plotting price action. One of the unique aspects of point and figure is that only the most important aspect of technical analysis is plotted. What is that most important element? Obviously, price. And because of that, point and figure charts reveal much more clearly what we all need to identify if we want to trade successfully. That is, the correct trend, levels of support and resistance, and breakouts. Without the skills to properly identify those aspects, no one can even dream to trade with any degree of success. In fact, the whole purpose of technical analysis is to identify the trend at the earliest stages possible and join it. And in order to do that, we usually study a great deal of systems, indicators, oscillators, cycles, crowd psychology, etc. And I have to admit that all those technical tools work absolutely beautifully, but they take a long time to be learned properly, and unfortunately, most of them are extremely subjective. Point and figure is 100% objective, and at the same time, it is one of the most simple and direct ways because it uses supply and demand. As I said, they are constructed with X's and O's, where the X's represent demand, up movements in price, and the O's represent supply, the down movements in price. The space that the X's and the O's occupy are called boxes. Each X or O represents a price interval previously chosen. That price interval is called box size. What this means is that before a chart is constructed, we give each X and O the value that we want. We call that, or refer to that, as the box size. It may be a 1 point, half a point, 100 points. That's all a matter of personal choice. It will depend on your time horizon. For instance, if you trade currencies, you may want to see the changes in the supply or demand after 10 pips. If prices go higher by 10 pips, it would imply that the demand is increasing, and vice versa. In this chart of crude oil, you can see that the box size is precisely that of 20 ticks. The size we choose is not really what matters. What does matter is that regardless what value is assigned, you may not plot an X or an O until the price has reached the next interval. Let's say that the box size you chose is 10 points or 10 ticks. That means that each X and O is exactly 10 points. Then the value of each ascending X would be 10, 20, 30, 40, etc. Some people believe that's exactly the way that Charles Dow registered prices and what gave birth to the point and figure charting system. If a commodity was going up, say from 20 to 30, he would be writing 20, 21, 22, etc. straight up. And once the increment started moving down, he would move column and start writing down 29, 28, 27, etc. And the reason why he used a different column is because otherwise he would have to write on top of the up column that he had just written. The fact that the chart was made up of lots of numbers was the primary reason why it was called a figure chart. By the way, if you like this video so far, leave a like as your sign of approval, subscribe for more trading tools, and share in the comments if point and figure looks interesting to you. Now let's continue. Remember how I said a few minutes ago that trading rules are defined over particular patterns in the X's and the O's? But the big difference with any other charting system is that point and figure patterns do not require special skills for identification like we would find, for example, in the Elliott wave principle. Let me give you a comparison with the most common pattern that traders use every day, the head and shoulders pattern. It really is one of the most popular and at the same time obvious pattern to spot. Yet, many analysts, me included, would argue that the head and shoulders is a reversal pattern. But then you'll find hundreds of examples presented by analysts who argue that the head and shoulders pattern is also a continuation pattern. The truth is that it's just a matter of interpretation. But worse yet, I see many traders pointing to head and shoulders patterns that don't qualify as head and shoulders because one of the shoulders is way too small compared to the head and the other shoulder. Again, it's just a matter of interpretation. In point and figure, the patterns are unequivocally straightforward, and I'm going to show you a buy and sell pattern right now so you can see how you, me, or the great trading legends in history will see exactly the same. If demand, represented by a new column of X's, overcomes supply and the column of X's breaks above the previous column of X's, that's the most basic buy signal and is called a double top. Nothing to do with the typical double top that you are familiar with. Here's the cool thing about point and figure. The double top buy signal is more than an entry point for a long position. It also represents the price at which any short position should be exited. Thus, the simple buy formation is both an entry signal for longs and also a stop loss for shorts. Conversely, if supply represented by a new column of O's overcomes demand and the column of O's breaks below the previous column of O's, we have a sell signal that is called a double bottom. The signal occurs when an O is plotted below the lowest O in the pattern. Here you can see a clear sell signal. As in the case of the simple buy signal, the simple sell formation signals two market strategies. One, to liquidate long positions, in other words, as a stop loss, and two, to enter short. Notice that the minimum number of columns required for a double top or double bottom is 3. There is always at least one column in the opposite direction between the breakout column and the previous column in the same direction. There could be more than one column, but a minimum of one column in the opposite direction is required. Now, with this simple knowledge, let's examine the chart of oil again. Notice that these double top and double bottom patterns are not subject to interpretation. I see 3 columns where the second column of X's move above the first, and that is a buy signal for me, for you, and for a 10-year-old who wants to trade. In this chart of oil, you can see the first column of O's found support at around 93.70. That was followed by a column of 3 X's. Then another column of O's was formed and it broke below the previous column of O's. So we had a sell signal at precisely 93.50. Where would our stop be? Well, remember that the double tops also represent the stop loss for shorts. That means that our stop would be one box above the last X column. Prices came down very quickly without interruption all the way down to 91.50. Thereafter, a new X column was formed but no buy signal, so the trade is still intact. A new column of O's begins and had the power to break below the previous column of O's, thereby providing us with a second sell signal. Prices then fell all the way to 87.10 without a sign of a bullish reversal. Now you could see those two sell signals given by a double bottom. And here's my question. Did we have to even think about it? No, both signals were unequivocal. The fact that the signals are so straightforward and with great efficacy doesn't mean you'll not get bad signals, of course. There are some bad signals too, and we have to develop filters. One such filter is the use of trend lines. You can see on this chart how with a downtrend line we can simply ignore all the buy signals until the trend line is penetrated. With that in mind, we would have only sell signals on this chart. Let's look now at another example. This time let's look at a chart of the S&P Mini so you can see how this works in a completely different market. For this example, I'm using a 5-minute data because it is what most people want to do with this market. Everyone asks me, can I use point and figure to scalp? And well, here's your answer. The first buy signal comes near the bottom at 4132.75. The next one comes as a confirmation of the bullish intention of the market and urges us to add to our position at 4135.75, just 3 points higher. The third signal comes at 4141.75 and it takes prices all the way to 4198. Think about it. This chart is using a 5-minute data and is allowing us to take about 70 points of the S&P with at least 3 contracts. That's close to 280 ticks with 3 positions and without the slightest hesitation. Thereafter, there is a sell signal, but remember we have an uptrend line that prevents us from taking any sell signal. We can only take buy signals. So we only use those sell signals as a way to exit our positions. People ask me often how to avoid a sideways market. I have no better response than to say point and figure. That is the answer. Let me make a quick summary for you by giving you the 10 reasons why I believe every trader should learn point and figure and why point and figure is way superior to any other charting system. 1. Being so easy to understand, point and figure is truly superior to other charting approaches. It takes only a few hours to become an expert. No prior market knowledge is required. You just learn the basics and can start earning money quickly. Obviously, the other components of trading success must still be present, like trading psychology and money management. And that takes me to the second point. It takes care of many psychological issues that typically affect the trader. The techniques and strategies of point and figure charting are so straightforward that eliminate doubt, ambiguity, and fear of missing out. 3. It focuses on what really matters, price movements. As I said earlier, many traders ask me often a very difficult question: how to avoid sideways market? The answer to that question is very easy: point and figure. Since point and figure only considers price movement, it prevents false trading signals that originate from timeline-induced distortions. 4. The methodology is a chart and trading system in one. For instance, the Elliott wave principle is simply a phenomenal analytical system, but to transform it into a trading system requires quite a bit of effort, experience, and knowledge. Point and figure not only depicts movements and patterns we can analyze, but most importantly, the chart translates directly into buy and sell systems, producing an unambiguous trading methodology. 5. It has been tested and proven to work. No other system has been so thoroughly tested as point and figure has. Perhaps because it is nearly impossible to teach a computer how to interpret chart patterns, but point and figure in its directness has been said by many academic studies throughout decades, and the results are always the same. Point and figure is profitable. 5th, No guessing required. Point and figure provides us with exact decision rules. You know exactly where to enter and exactly where to exit a trade. 6. The exact same techniques apply to all and any financial instruments. You can trade stocks, indices, futures, forex, cryptocurrencies, etc. Point and figure is universal. 7. You'll always catch the major moves. Simply put, there will always be an entry signal, so you will never miss a major move again. 8. It always displays with clarity your potential point of ruin. Point and figure will not only give you exact entry points, but it also provides you with the exact stop placement. No guessing required. 9. It allows you to pyramiding into your positions, putting your money where you want it to be, into the profitable trades. And lastly, it generates clear trend lines. Point and figure is non-ambiguous about where to draw trend lines. Unlike normal charts, the trend lines in point and figure follow strict rules as to where and when to draw them. Let me know in the comments what are your thoughts on point and figure. Have you tried it before? If you like what you saw here today, if you think that there could be something for you in learning point and figure, then you may be interested in participating in our Technical Analysis Mastery program, where we dedicate an entire module to point and figure charting. I have included the link to the program in the description below. Let me just emphasize one thing about the price. The value of the point and figure module alone surpasses by far that of the entire mastery program. This should give you a clear idea of the tremendous value the entire mastery program offers. And remember, in the Technical Analysis Mastery program, we cover everything you need to know in technical analysis in order to become a successful trader. From trend lines, moving averages, MACD, RSI, trading psychology, Elliott waves, and of course, point and figure. Thank you for watching. If you found this video helpful, don't forget to give it a thumbs up. Share it with fellow traders and subscribe to our channel for more insightful trading tips and strategies. And remember, knowledge is power, but applying that knowledge is the key to trading success. See you in the next video.